Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that.
Ice raw sugar in New York. I've mentioned over the last 3 weeks two significant longer term patterns that have been responsible for the market's capping action over mid to late March, and one of these is now being tested on the downside. The patterns are, firstly, the breached but now seemingly repaired bright green late September 24 to late February 25 bearish shift pitchfork. The bright green upper time, currently at 15.5 of this pitchfork, was tested and breached 3 to 4 weeks ago, but has seemingly been repaired, and prices are now testing the bright green middle time below, currently at 13.24. So far it's rejected it today. The second pattern is the even older and bigger bright red November 23 to September 24 slightly shallower bearish shift pitchfork. And the market here approached the upper time currently at 15.96 3 weeks ago, but the bullish incentive was not strong enough to really test this upper time, and instead prices have dropped down a significant way down towards the bright red middle time below, currently at 12.60. All these actions strongly counters the monthly key reversal up we saw in March, and indeed we have had on Friday the lowest low and low close since September 2020. So what do we have below that might interfere with such a move down? And the answer, apart from the bright green and bright red middle tines, is very little. There is some congestion at 12.48 from late September 2020, but you would have to look at the September 2020 low at 11.73 to see any sort of potential support. Meanwhile, on the top side, the immediate resistance is a congestion band between 13.79 to 14.09, and that's containing the 61.8% Fibonacci line for the 21st century at 13.82. Ice Europe white sugar in London. The market was capped in late March by a combination of the significant February 2020 high at 456.70 and the bright red January 2024 to date downtrend, currently 454 even, plus congestion generated by that February 2020 high and seen back in mid-2025 between May to September, from the February 2020 high up to about the 495 even area. The subsequent move lower dropped somewhat surprisingly through all the moving averages fairly swiftly, though I do note now the attraction last week around the flatlining mauve medium moving average, which is currently at 421.40. And also I suppose to a certain degree the green short medium moving average at 419.10. But the market seems to have finally stabilised over the November 25 low at 406.40 and under the important bright pink middle time, currently at 426 even, of this singular and most important pattern here on this daily chart. That is the bright pink September 24 to March 25 bearish shift pitchfork, which is the showrunner for this market for over a year now. It was, as I said, 52 weeks ago, and I quote, "Also keep an eye on the bright pink late September 24 to mid-March 25 recently finessed bearish shift pitchfork. This is a very shallow pitchfork, and the more the market moves lower through it, the more I'm beginning to like it." End of quote. So what do we have now that affects this market? Well, there is now a question whether the action over the last 2 weeks is becoming a hesitation, a bearish hesitation, or a basing action. All this has been prompted by the congestion we saw in the first 2 weeks of March between the November 25 low at 406.40 and highest seen in 2025, around about the 436.10 or 437.70 areas, those highs back then. The jury's still out on whether the move will be a bearish hesitation or a basing action, but I will say this, the longer this goes on, the greater the chances will be that this becomes a basing action. Sugar white premium spread. There is one feature that overshadows all earlier bearish patterns on this chart. I said this as much 28 weeks ago when I said, and I quote, only concerted, consistent and long-term moves over the bright new red neckline, it's currently 97 3/4, and ideally over the rising long moving average, currently 106.5, could possibly assuage the bearish potential, end of quote. Well, 9 weeks ago we gapped high and closed over the bright red neckline. Then 4 weeks ago, and again these past 2 weeks, we have closed over the very slowly declining gold long moving average. Thus we have stabilized over the bright red neckline, and we are trying to stabilize over the gold long moving average. The bullish incentive is there and is becoming more and more justified. This brings me to my next point when I said 4 weeks ago, and I quote, I suspect consecutive closes over this gold long moving average will be key to the future health of this market. If those do not happen, then the bright red neckline below is seemingly ready to be tested again. End of quote. Well, we are very close now to fully letting go of the gold long moving average on the upside. So what do we have above that could stymie further gains? And the answer is not much. Not much. You would have to look higher to the July 25 to date downtrend, currently at 120 3/4, to see the first nominal resistance. And then that would only be a 2-pointer downtrend. Not that great. That already has shown last week that it will not hold on any testing higher. This downtrend is heading lower, if at a somewhat snail's pace, and should we overcome that downtrend, then I suspect the next resistance will be a pair of 50% Fibonacci lines higher up, a little bit more serious now, from July 2019 to September 22 move, and the August 2021 to September 22 move, at 128 3/4 and 131 3/4 respectively. To be honest, none of these three resistances look that great right now, but the market is seemingly trying right now to overcome some recent resistance in the 115 even area.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.